Welcome back to the deep dive. It's July 31st, 2025. Today, our mission is really to cut through all the noise. We want to give you the essential insights into the latest economic signals, the strategic shifts shaping, well, everything globally, and also what's happening with Malaysia's money matter specifically.
Absolutely. We've gathered the key reports, the analyses, and we're ready to sort of unpack what's really driving things so you walk away properly informed.
Okay, let's start with the global economic chessboard. It feels like trade, tariffs, monetary moves, they're constantly reshaping the game, aren't they?
They really are. Take Germany, for instance.
Mhm.
Their second quarter GDP actually contracted slightly by 0.1%.
0.1%. Small but significant.
Yes, exactly. Partly because some strong buying that happened earlier, businesses stocking up ahead of potential U.S. tariffs, that reversed.
Right, even though the US and EU did manage to strike that framework agreement.
They did. It imposes a 15% import tariff on most EU goods, which, helped avoid a much bigger trade spat, but the anticipation and the reversal still had an impact.
It shows how even the threat of tariffs can ripple through, doesn't it?
Precisely. Businesses react to the uncertainty. Major exporters like Germany definitely feel that pinch.
Okay, let's shift focus a bit towards Asia. What's happening there?
Well, India is facing a new 25% U.S. tariff starting August 1st.
25%, that's quite high.
It is. And there's potentially an additional penalty linked to its energy deals with Russia.
So geopolitics playing a big role there.
A huge role. And you can already see the impact on India's rupee and its stock futures. It's putting them in a complex position, balancing partnerships and economic realities.
Definitely a tightrope walk. And elsewhere in Asia, what about commodity prices?
We're seeing copper prices edge up a little. That's partly the weaker dollar, but also there's a looming 50% U.S. tariff on copper, also starting August 1st.
50% on copper, wow. And oil?
Oil prices also ticked up slightly. This came after a U.S. ultimatum to Russia, which could potentially lead to 100% secondary tariffs on countries trading with them.
100% secondary tariffs. That could really disrupt global energy flows.
It certainly could. Significant potential impact there.
Meanwhile, Singapore's central bank decided to keep its monetary policy steady.
Yeah, they noted that trade tensions have eased somewhat, but interestingly, they also observed that the effective U.S. tariff rate on Singapore's own exports has crept up to 7.8%.
So even with broader tensions easing, the direct impact is still being felt. What's their strategy then? Holding fire.
It seems like it. Holding their monetary ammunition, you could say. They're likely waiting to see the full picture, how these global trade shifts really affect their inflation and growth before making any big moves.
Okay, so that's the complex global stage. How is Malaysia navigating all these currents? Let's bring it closer to home.
Well, there's some positive news. The International Monetary Fund, the IMF, actually upgraded Malaysia's economic growth projections.
Oh, really? What are they projecting?
They're looking at 4.5% for 2025 and 4.0% for 2026. And they partly attribute this, interestingly, to that same front-loading effect we saw elsewhere, businesses adapting ahead of tariffs.
So anticipating and adjusting, how does that IMF view compare with, say, Bank Negara Malaysia's own forecast?
B&M's revised forecast for 2025 is a little more cautious, in the range of 4.0% to 4.8%. So the IMF's 4.5% sits comfortably within that, maybe slightly more optimistic, offering a strong external validation of Malaysia's adaptability.
Adaptability seems key. And on the corporate side, Alliance Bank is holding its net interest margin guidance steady, right? Between 2.4% and 2.45%.
Yes, which is quite notable.
Especially since Bank Negara just cut the overnight policy rate, the OPR, down to 2.75%. Usually that squeezes bank margins, doesn't it?
It typically does, yes. So Alliance Bank's confidence suggests they're managing things well, maybe diversifying income, managing funding costs effectively, or perhaps their loan book is just less sensitive to these rate changes. It shows resilience.
Resilience and maybe proactive risk management.
Definitely. Others will be watching that closely.
Now, speaking of policy, Malaysia's government has been active too. They've tabled amendments to the Countervailing and Anti-Dumping Duties Act.
That's right. This is really about strengthening their ability to investigate and act against things like duty evasion or products being rerouted to avoid duties.
So aligning with WTO rules and sort of responding to global pressures, like from the U.S.
Exactly. It's about ensuring fair trade practices and avoiding potential unilateral actions from other countries. a necessary move in today's climate.
And another big policy shift, the proposed high-value goods tax. That's officially off the table now.
Yes, it's been scrapped, but its elements aren't gone entirely. They're being rolled into a revamped sales tax system.
How will that work?
There will be rates of either 5% or 10% applied to certain luxury and discretionary items. The projection is that this revised approach could bring in an extra maybe RM5 billion in revenue next year.
So finding revenue, but perhaps in a less disruptive way than a standalone luxury tax.
That seems to be the thinking. It's a pragmatic fiscal adjustment, broadening the tax base without potentially harming specific luxury sectors too much. Adaptable.
And still on the positive side, Malaysia secured significant digital investment from China, right?
Yes, nearly RM3 billion, 2.97 billion, to be precise, in confirmed digital investments from Chinese tech firms.
That sounds substantial. What's the impact?
It's expected to create over 6,800 high-value digital jobs. It's a huge boost for Malaysia's digital economy aspirations, bringing in tech, expertise, and really affirming its place as a regional digital hub.
That's a strong vote of confidence. And any other key developments on the domestic front?
Just quickly, the government is also developing a renewable energy certificate framework that's to improve green energy management. And there's movement on nuclear energy, too. A pre-feasibility study suggests it has significant potential as a primary energy source for Malaysia down the line.
Interesting. So long-term energy strategy is also in focus.
It seems so, covering all bases.
Okay, so if we pull all these threads together, the global tariff chess game, the policy responses, the corporate resilience, what's the big picture?
Well, it feels like the global economy is definitely in a period of major recalibration. Trade policy is absolutely central to that. And Malaysia, as we've discussed, is showing some real proactive adaptation.
It does seem that way. Which brings us to a final thought for you, our listeners. What really stands out to you about how countries and companies are navigating these shifting trade dynamics?
Yeah, are we genuinely seeing a new era of economic resilience being built? This ability to pivot and adapt? Or is this just a temporary lull, a pause before the next wave of uncertainty hits?
Something to mull over. That's all the time we have for this deep dive. Thank you for joining us.
Thanks for listening.
And if you found these insights valuable, please do subscribe to the deep dive. That way you won't miss our next session unpacking the developments that matter.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.